Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media, generally related to three topics: wealth building, finance, and or commodities. So let's dive in there. Let's see what's going on. I'll sprinkle in my financial opinions as we go. And let's head in there. If you want to follow me at @Finance, and if you want to join our community, we still have a discount coupon code LEAP. Finding-value.com is where you want to go. And we've got a 5 p.m. question and answer session today, Mountain Standard Time. I'd love to have you guys with us. If you're thinking about joining, go ahead, put that LEAP coupon code in, try it out. If you don't like it, let me know, shoot me an email, and I'll work with you. So here's Sahara, Extreme Bull for GLD or gold. The targets are a combination of swings, patterns, and measured moves, along with Fibonacci extensions. Want to see this pop of the cup hold? If so, then I'll be monitoring those channel lines for resistance and supports. So let's look at this thing together and see what he has got. Okay, so I centered it up. We've got the lead-in of the cup and handle. We've got the cup and the handle. We've got the breakout basically going on right now. These are a bunch of projected moves of gold based off a variety of things. Fibonacci sequences, which you click it here, click it here, click it over, and then it'll come out with all these different measurements of certain measured moves. The first move is $2,800. The second move is 34, 4,800. I don't know how that's less. That's probably 4,000, 4,770, 5,300, 6,000, 7,680, 9,000, and 12,000. And that depends on where you go across for these Fibonacci movements. And they project off of this big base that occurred from 2000 all the way up to 2011. So this also could be a projected move upward to this upper trend line that also contacts that trend line. So I think they're all valid. You can even see very faintly the Fibonacci sequences here. So that's the projections that he has for gold, depending on where it eventually ends up and stops. My feeling of this, if I were to take a stab at it, and just kind of say, where do I think gold's going to go by the end of the bull market? The end of the bull market will be early 2030s for gold. Commodities, they'll peak out at 2028. That's my guess for the business credit cycle, the near term one. And I think gold by maybe 2030, 2031, something like that. I would say between $8,000 and $10,000 is probably a good guess. That would be my guess. Commodities are an ever declining proportion of financial assets. So nobody wants to own commodities. You can see that we are very, very small in relationship to other asset classes. So the white is the commodities, the blue is bonds, and then the rest of this going all the way up is equities. So commodities are basically a very small fraction compared to history of what people own in terms of financial assets. I think that this is going to dramatically change in the future. What is going to change that is going to be the cost of energy and interest rates. Those two things are going to propel money to move in the markets differently. They're not going to favor financial assets in a very high interest rate and inflation environment. I think they're going to rotate into commodities and hard assets. But we are at the very beginning of that occurring. I mean, the very, very beginning. 2020 is probably around the area where it bottomed in terms of prices, and then financial flows. We're going to see a big shift. That will start to occur whenever energy starts to go into a larger move to the upside. Here's oil. So BTE, we also have TVE. It says one digit different from quarter two. So eight capital analysts said they expect differentials to narrow to single digits in the second quarter due to the Trans Mountain expansion startup. So heavy oil, there's a lot of heavy oil up in Canada. It's I think they call it Western Canadian Select. I think's the name of it. Yeah, Western Canada Select. Um, so it began trading at 1575 and ended the day at 1565 per barrel under West Texas Intermediate crude. It's traded between 1575 and 1630 per barrel below the US benchmark. And with this Trans Mountain Pipeline extension coming in, they're projecting that the difference between WTI and WCS is going to close the gap to some degree. And that's going to be good for producers that produce heavy oil up in Canada. They don't even need the WTI price to really go up. They just need that difference or that delta to squeeze up some degree, which I think will occur. There's hope for silver junior miners. We've got gold versus the consumer price index here, a Patrick Karam chart. We've got a breakout of this gold versus CPI just recently. So we had a breakout in 2016. We had a breakout here in 2019. And you can draw another trend line going across this way that's broken out as well. And then we have a horizontal trend line that's broken to the upside as well. The silver junior miners, every time we've seen this type of movement, you can trace back this guy on the breakout of the silver junior mining companies. I hope that's the case because I am positioned for this to occur in some of these silver junior miners to really hopefully benefit from this. Now, from a month's perspective, these go up very fast. They may only go up for 6 months to 8 months. Generally, it is something to do with printing money or quantitative easing or lowering of interest rates or a combination of all those three things. Gold's already sniffing it out. People are positioning in gold because insiders know that something's coming and they know how gold reacts to that. So they position first. That's what we're seeing on the breakout. They are positioning right now. And then generally silver and silver junior miners and a lot of the mining companies lag behind it. And that's why we've got that laggage behind it. But I think we're going to break here hopefully very soon. And we get a big move in like a 6 to 8 month period. And then I can rotate into dividend paying stocks or something like that later. So gold, more gold. Gold is breaking out on a daily, weekly, monthly, and quarterly chart time frame. The margin expansion on some quality optionality plays among the minor companies is going to be more than astronomical. So it begins, get ready, get proper guidance. So here's gold, the 53-year chart. We've got a big move in the 70s, consolidation, big move in the 2000s, and up into 2011, consolidation. The 2020s is going to be a big move here, boys. We've got the third bull move, which will kill the present global monetary system. I agree. And energy is going to be the driver of it. The largest three drives up move I've ever seen. So I can tell you and describe to you these three big movements and what drove them, in my opinion. The first big bull movement, it wasn't necessarily just that Nixon ended the gold standard in 71. That was not the sole reason. The reason, in my opinion, was twofold. Well, threefold, I guess. Yes, Nixon killed the gold standard. We could trade freely. I get that. That had to occur. Two, we had peak oil in 1970 in America only, but we could import more oil from other places. And then three, the demographic was in home buying years, and it was a monetary expansion in the 1970s that put a lot of pressure on energy. And that energy in a supply deficit caused a lot of pressure in the market, and people got worried about the bond market and the currency market. And that's what resulted in this big move here. In my opinion, something very similar like the 1970s is occurring today, but it is much larger than the 1970s. It's larger because America had that problem in the 1970s. Now it's the entire world. We are running into what I think is the world constraint in energy. That occurred in 2000 to 2011. That same general time frame, we had a constraint in energy. A lot of people were worried about peak oil, and we did have peak oil of conventional oil. Then we went into a consolidation after shale came on and a bunch of other oil fields like offshore drilling. There was a lot of oil that came out after we basically squeezed up the oil price to the upside. Now, I think we are going to hit another underinvestment period of oil. I think that we're going to get even tighter because it's the entire world's oil. And I think people are really going to run into gold and silver, and it could very well kill the present global monetary system, which means that a lot of people with a lot of money around the entire world are going to all run at this at the same time. That's not going to end in a low gold price. It's going to end with gold probably much higher than what even I think it can do. But it doesn't matter what I think, it matters what the eventual reality bears out. And I'm positioned for that reality to bear out a certain way. Coming down, we've got Dave here. He says, look at shadow stats versus the consumer price index inflation. An eyeball estimate tells me that inflation has averaged 5% above the CPI for 30 years. Let's assume for laughs that shadow stats has it right. What are the implications? I'll take a stab at a few of those. And this is the shadow stats and basically the 1980s based calculation versus the CPI that they manipulate, so to speak. What he says is since the US GDP is inflation corrected, the reported 2 to 3% average GDP growth over 30 years is really -2 or -3% growth, quote growth, it's shrinking. Ergo, the US has been in a grinding contraction, a recession, for 30 years. A negative 5% inflation correction on the inflation corrected 30-year investment returns need to be further corrected by fourfold. Any payment system corrected for inflation also needs to be corrected fourfold over the last 30 years. Do you feel like you're losing ground? You are nuts. So yeah, I agree. Here's Logan. He says active housing inventory exploded from 2005 to 2007. That was the crash that eventually occurred in 07, 08, and 09. This is the NAR data, traditionally between 2 and 2.5 million active listings. The 2007 peak was at 4 million active listings. In 2024, we're a tad above 1 million. So we're under half what the traditional average active listings is. And a lot of people say, oh, we're in a bubble. There's no way, guys. We're not in a bubble. We need to build the inventory back up for me to believe that we're even close to a bubble. And we got to build it way higher than where we're at today. Art says there is no energy source within reach of our species that can replace fossil fuels. It's the transition from an obsolete economy of growth to the new economy of contraction that will likely generate the most colorful fireworks. We are entering an unfamiliar world. Now, here's the thing. This is already occurring based on energy return on investment, which also ties up with this and how we're contracting, and they're just printing money to basically paper it over. It's already contracting to some degree, and that's why life feels like it's getting harder, because it is. It is. It's getting more expensive because energy is becoming less plentiful. And your dollar is it's gonna be an inflationary move. So here's Robert Friedland talking about copper and these artificial intelligence data centers. So Goldman on the link between AI data center growth and copper. Key linkage are the copper requirements tied to the data centers to support AI growth. We estimate that 1 gigawatt of data center capacity required between 40 and 60,000 tons of copper. Estimates vary on planned additions, but US roughly planning to add 8 gigawatts in 2024, 12 gigawatts in 25, and 16 gigawatts in 26, after 3 gigawatts in 2023. In copper volumes, that means 200,000 tons of demand in 23 in the US, then as much as 4 to 500,000 tons in 24. Using the NVIDIA assumption on AI demand growth for 2030 implies we could eventually be at a level where data centers require 2 to 2.5 million tons of copper per year. This is just the US. China will also look to expand data centers alongside green demand. This should underpin healthy US copper demand growth this year and into mid-decade with this AI demand for copper. It's almost like gold moves first, then Bitcoin catches up. He's got the gold futures chart and the Bitcoin chart. Now, is this going to correlate? I don't know. But he's got the correlation there. I just wanted to show that. Here's uranium. This could be a potential path. He's got Encore Energy here. Back to the 200-day moving average, question mark. It did that last time here before heading back up. Maybe that's where we end up, is back to the 200-day moving average. Whenever you start to stretch above the 200-day a lot, have a potential to move on back to the 200-day at some point. Here's Saturday's wisdom. The history of energy is the history of humanity. Pay attention to who is writing your history and planning the future of your children. Energy shortages means no prosperity and shorter lives. Charlie Balello, he says, only 24% of S&P 500 members outperformed the index over the last year, the lowest percent on record with data going back to 94. You know what's weird? In 1999, when it was at 30%, roughly where we're at today, that was the beginning of the commodity bull market. It was right around that time frame. So I think that this is going to cycle back up. We could get a slowdown in the market, and then our commodity bull market's going to kick into gear here. Dow Jones update, brutal sell-off pending is what this guy thinks. There's a breach of trend, momentum is slowing, distribution candles. I tend to believe that as well. You can see that we are struggling to work our way on up. You've got a big move here, a smaller move from this distribution candle to here, and then a smaller move from here, and a smaller move from here, and then we get a sell-off, and this is going to roll over and come down. The momentum is definitely slowing. You can see that in the bottom there. That very well looks like something like that could occur. So we could see selling pressure, and that could potentially drag down our commodity investments. Here's Apple versus gold. This is further solidifying that opinion. It is a ratio, and you can see that Apple definitely looks like it's peaking out and rolling over and breaking the uptrend line, and basically ready to move down against gold. And that is signaling a change in the business cycle. It is. We're changing, and gold's going to most likely outperform here from this point on. Silver is about to go parabolic. Silver is going to go where gold goes. Back in 2020, silver added 67% within less than 2 months. This scenario can repeat in the second quarter of 2024. So we can see a big move when we break out of this pattern here. Like we did in 2020, we could see another very large move. This is bulk carrier, spot earnings, Capesize. I can't even say that. And Supermax, they're all looking like they're ready to turn higher here. And Capesize is already ripped. It's already ripping. Already ripping. HZ, the next bull cycle will be led by energy and commodities and also precious metals. Crap coins and tech companies are the last things you would want to own in a rising interest rate environment where the West is losing its global dominance. Resources will be scarce. I actually agree with this guy, and I don't really agree a lot with him. But on this one, I do. So this is within the U.S. We're down 7 rigs. Oil's down 2, gas is down 4, and miscellaneous down 1. So total rigs were down 124 year over year. And this is putting pressure on some of the energy service companies to the downside. Obviously, gas is in a glut, and we're going to probably get a good buying opportunity over the next few months, and hopefully prices stay low where I can keep accumulating. We've got my opinions here. So GDX looking cheap against the physical metal. Be brave when others don't care. Perhaps a double bottom for SILJ against silver. This is the GDX divided by gold, downtrend, basing pattern, and we're on the low end of this. We're basically back in 2016. So if we start to see a move to the upside, I would get very excited over that. We also have SILJ versus silver. We had a nice big 2016 move, and you can see that we're basically doing a double bottom here. We even touched it here in 2020 briefly. If you were lucky enough to buy it here and ride it all the way up, you made a good chunk of money there. I think that we're going to break this eventually, and that's what I'm watching. Watching this ratio to see if we can break to the upside. Silver juniors do very big moves in very short periods of time, and then you want to swap it to something else. I've got gold looks bullish and feels bullish. Should we be massively bullish on silver as well? Breakout soon? Question mark. This is the big consolidation here, breakout, and we have another consolidation that we're basically breaking to the upside. And then silver is still squeezing, and that's the one that I'm got my focus on. Silver and silver junior companies, because that's probably one of the cheapest sectors. It's not the cheapest, but it's one of the cheapest in the markets. There's probably two sectors that are very cheap at the current time. Three sectors. Three sectors. Energy service, nat gas, and silver and platinum. Those are the four sectors that are just dirt cheap. Here's Jesse. He says the largest outflow ever from tech. Look at that. Look at that move outflow. That's distribution, guys. Distribution does not look good. And that's what I've got for today. So give me a thumb up for the content. Subscribe to the channel, guys. Subscribe to the website. We do have a 5 p.m. question and answer session coming up. Don't forget about it. Log on. Ask me whatever you like. I do have a macro environment presentation to give you guys, to give you a kind of an orientation of the way that I view the markets. And to give you some background on how these cycles kind of work, what to look for, yield curves, I'm going to get into all that stuff and why I'm so bullish on certain sectors. Dive into it so you know what I know. All right, that's what I've got for today. We'll catch you later. This is Finding Value.